All right, guys, this is going to be a little bit better of an explanation on the model that I am currently using. So you can take it, back test it, see if it might work for you. I'm not a financial advisor. This isn't financial advice. I'm not going to tell you how to trade. I'm just going to tell you how I am trading at this moment in time. So this is the three candle model, and this is the best three candle model. There's a couple of different ones, but this is the best one that I use. It's a three candle model with a sweep and a divergence. Okay, I trade ES, so my divergence is with NQ. Uh, I don't really pay attention to the Dow. I mean, it could probably be helpful. I just don't pay attention to it. So each one of these numbers, one, two, three, these are 3 hourly candles. This is where I'm talking about a three candle model. Okay. So once we get the first candle, okay, we're looking for a second candle to sweep candle one's high and finish and close back inside the range of candle one. Okay, it has to close back inside the range or below the range of candle one, the first hourly candle. Then we're looking to trade the third hourly candle. And the reason we're looking for this is because hourly candle two could not close above the first hourly candle. So when it closes back inside the range of this candle, we think, well, maybe the next candle we're going to continue lower because it didn't have enough strength to close outside the range of this candle. So this orange line is midnight, so it came and touched midnight. It's good to use midnight. I like using midnight. It doesn't always work out like that, but it's helpful sometimes. So candle three, we're going to wait for candle three to open, and I don't take a trade until I try not to take a trade until after the 25-minute mark of the hour. Right, this happens to be the 9 to 10 candle, so it's the open, so it's going to be volatile. Uh, so right here, I've kind of laid out in 7 steps what I'm looking for. Candle two sweeps candle one and closes back inside the range of candle one. These are hourly candles. This must happen between 7 Eastern and 12 Eastern. Okay, I don't trade before 7 and I don't trade after 12. I'm not good at trading the evening and I don't like trading during lunch. So once this happens, once this sequence happens, my bias now is going to look short. That's how I look at it. Will it continue? Will candle three continue lower? And that's where we're going to look and see if it gives us clues that it's going to continue lower. Okay, so candle, it opens here. We're not trading any of this stuff right here. Don't get caught up in FOMO right here. We're going to wait for a sweep of a intermediate term high. And that's just a high inside a fair value gap. So here's one. Here's another one. There's a tiny little fair value gap right here. This goes above it and it sweeps it too. So ES sweeps this intermediate term high, this intermediate term high, and this intermediate term high. NQ doesn't sweep any of them. Here's NQ, right? These are the highs that we're talking about. Here's the high, here's the high, here's the high. ES sweeps all of these highs right here. NQ does not. So now we have a divergence on the lower time frame. This is a 1 minute. We have this divergence. So that's a clue that, hey, we're fixing to go lower, in my opinion. So we also have a divergence on the higher time frame. So on the hourly, NQ swept over here that we can't see on this chart. It swept another higher time frame intermediate term high. ES did not sweep that high. So we have a divergence between ES and NQ on a higher time frame, on the hourly time frame. And then we also have a divergence on the lower time frame, on the M1, the minute. Okay? So once we get that sweep and a divergence, we're waiting for that candle close back below the 21 EMA, right? So I want the sweep to be above the 21 EMA if I'm going short, and I want it to close above the EMA, the 21 EMA. Then I want it to reverse, close below the EMA, and that's where you would enter the trade. Okay, so this one runs back 6.25 points, but I'm going to talk about that in a minute. I just want to make sure we've got this part of it. So we've got 3 hourly candles. Hour 1, hour 2 sweeps hour 1 and finishes back inside the range or below the range of the first hourly candle. Then we're looking to trade the third candle. We're looking for a sweep above the 21 EMA that sweeps an intermediate term high and closes above the 21 EMA. And that needs to happen after the 25-minute mark of the hour. Okay? So preferably I want that sweep to happen between the 25 and the 35-minute mark. If it doesn't happen then, I'm looking for another one between the 45 and 55-minute mark of the hour. And if I don't get those, then that's not my model and I don't trade it. Once you get the close back below the 21 EMA, you can enter the trade. I enter the trade. Okay. Other points of interest. So this works without the divergence. You don't have to have a divergence. They can both sweep, and they can both sweep the higher time frame as well. You don't have to have a divergence. It's just a higher probability that it may work out if you do have the divergence. So I keep a tight stop. I trade 2 contracts. This is a 50K eval or 50K PA, either one. I'm trading 2 contracts, and I have a static stop of $500, 5 points. And I set a trailing drawdown at 2.5. So once it reaches 2.5 points, my trailing drawdown is triggered and my stop moves to 2 points in profit. So it's 2 ticks behind. And every time price moves 2 ticks in the direction that I want it to go, in this case short, my trailing stop will move 2 ticks behind it. It stays 2 ticks behind it the rest of the time. And I do this because I don't like it to come back on me. And this is the prime example right here. This was taken at a great time, right? It's after the 30-minute mark. Here's the 30-minute mark right here. We've swept. We have divergence. We have 2 divergences. And we get a close back below the 21 EMA. Well, it doesn't always mean that it's not going to go up one more time. And that's what it did. And if I would have entered here without my trailing stop, it would have came back, because I keep such a tight stop, it would have came back and stopped me out. It came back 6.25 points. So it would have stopped me out. But since having my trailing drawdown on, it actually triggered in this small move right here. It triggered and I would have been green. And then if I wanted to, you could re-enter this again right here at this close. And then you'd be in the real move going down. But it came back one more time to sweep some more stops for whatever reason, and before it made the move that it was going to make lower, before it decided to continue lower. So the trailing stop just ensures me profit. And you have to look at it like this, right? I know it's $200 or $250, but if you're prop trading and you can get 5 prop accounts and you can sync those together and you can trade those at one time, your $200 becomes multiplied by 5. So now it's $1,000 day, not a $200 day. That's how you make money on prop firms. You don't make it trading one account, 10 contracts on one account, on the performance account. You have to take the little base hits and trade multiple accounts. That's the only way to do it. That's the way all those guys do it. So put a trailing drawdown on it. So a trailing stop, not a trailing drawdown, a trailing stop on it, so you can stay in profit, even if it's just small. Just take your base hits on your account, on your evaluation account, and get to the PA, right? Then take your base hits on the PA to get to a payout, and buy another account and do it again. That's how you should do it. But this is my model. Screenshot it, whatever you want to do with it. I don't care. I'm not I'm not gonna keep some kind of secret, but it works a lot. And if you'll back test it, it works a ton of time. And if you'll just be patient, and I'm talking to myself right now because there's a lot of times I tell myself I'm only going to trade this, and then I try to trade something else, and it winds up biting me in the butt. So trade this on a sim account if you want to, and see what you think about it, and let me know. It's a really easy model to see. You can just sit and watch the hourly until you get that second candle sweep and finish back inside. You don't have to sit and watch that 1 minute and get FOMO and want to press a button. So this one I think will help people. It's really helped me become more consistent. I'm still not consistent as I want to be. I just have to have better discipline, probably like most traders. So I'm still learning, and I thought maybe this might help somebody else. I've been looking at different things for a long time, and this is where I've finally kind of settled in on this model for me. So if you find some value in it, just hit the like button, subscribe if you want to. If you have any questions, post them in the comments, and I will try to answer them as best I can. Thanks for watching, and I hope it helps you out.